Yo, what up, guys? This is the voice of Mr. Solution. So, on today's episode, we'll be looking at 5 cryptocurrency lessons for new traders and investors. Let's be real, cryptocurrency market is actually still a budding market. Okay, so as the days go by, as we advance, a lot of things keep coming up, a lot of things keep cropping up. But then it's expedient that those of us who have been a little bit longer in the system, those of us who have traded the market for quite 2 3 years, for quite some time, say 2 3 years, so it's good we share what we've been learning, share some of our experiences. Okay, so that's why I decided to put up this video to guide you, to share some of the lessons I've learned and some of the mistakes I made. And then I equally want to encourage you to learn from this lesson so that I don't go ahead to make those mistakes I have made. Okay, so the lesson number one here is plan your trades before pulling the trigger. I don't know how many of us have experienced this. It has happened to me several times. It still keeps happening. Okay, where some people get to ask you, they just enter a trade on impulse, and then your DM asking you questions, or maybe you post something on social media. In response, they ask you, so what's your target? What are you looking at? No, those questions shouldn't be. So that's why I said you should plan your trade before pulling the trigger. Don't enter any trade by impulse. You should have a concrete reason why you're entering that trade. But before you enter the trade, look at the risk to reward ratio. Okay, what are you risking? Whatever you're risking, look at what you're making, what you're going to make from it. Is it balanced? And in the last video we shared, I said something about position sizing and stop loss. If you know that your stop loss is huge, the best thing to do is for you to reduce your position size, and then you look at it very well and discover that your stop loss is small. It's okay for you to increase your position size. Okay, so here I said stop asking people what their target is. You need to plan your trade very well. You need to make sure that any trade you're entering, you have your exit, you have your entry, you have your invalidation points before entering that trade. Okay, so point number 2 is stop over trading. Stop over trading. I can't say this thing enough. You don't need to trade all the markets you don't need to. There are many thousands of cryptocurrencies in the market. You don't need to trade all of them to make money. You can just focus on one or two. The most money I've made so far has been from this particular coin. The most money I've made has come from Lux. Okay, those of you who are in my Telegram community, I've always been dropping charts, signals, analysis on Lux. The most money I've made so for the past 3 to 4 months or thereabouts was from Lux. Okay, and I'm still on it. I'm still on the trade. So this thing just shows the analysis I've done so far on that coin. Okay, from when it went up till we started going, I've always been following the coin. It doesn't mean I don't trade other coins, but then I am always very well on this. I'm always following it up, and I've always been trading because I have understood its move. I've understood its move, and currently I'm still on the trade. I'm still on that. I'm still on the Lux trade. I entered it sometime this afternoon. Until now, I'm still on the trade. You can see it hasn't met my final. I have some targets there. Okay, so that's why I said you don't need to overtrade. Make sure you know what you're doing. As long as you've understood the market, as long as you've understood the coin, you've understood the volatility, and you very well know the time frame you're trading. It makes no sense dabbling into 10 to 20 coins. Okay, so it's always good. Maybe it's just 5. You've understood its move, you've understood its volatility, you've understood the time frame that suits you very well. Stay there. You can equally make even much more money than the person that is dabbling into many coins. Okay, so don't overtrade, and also know when to stop trading. That's what I mean by not overtrading. Know when to stop trading. That's another way you can look at overtrading. Know when to stop trading. If you know that maybe 2 trades you took today that you've gained your target, is okay. Stop. Don't dabble into any trade again, maybe, because most of the times people that do that end up shooting themselves. Okay, so don't overtrade. Have a plan, have a target. Once you meet that, it's okay to exit. Then don't pick tops and bottoms. Okay, there is really nothing wrong with taking profit, and you can only take profit when you have already planned your trade. Anybody that has been following me, you can always see that in my Telegram community, I always emphasize take profit. Nobody goes broke taking profit. You can't be liquidated by taking profit. So normalize taking profits. Normalize taking always. You can't. There's no how you can sell. There's no how you can sell the top and buy the bottom, and there's no how you can buy the bottom and sell top. That's why it's always good for you to have predetermined point of exit. Have predetermined point of exit. That's why whenever I am dropping my signals, I always say target 1, target 2, target 3. What I mean by that is that you should always plan. Maybe at this target 1, you could just say maybe take out 10% from 10% to close 10% of your position. Maybe target 2, close 5%, target. No, just like that. Keep taking profit because nothing is guaranteed there. Even as this trade is now, I've equally taken a sufficient amount of profit, but I'm still on it. So whatever happens, I know nothing is going to happen. Okay, whatever happens, worst case scenario, I might just break even. The trade could just end up with me breaking even, but I know I have taken sufficient profits from it. Okay, so you can't sell. There's no how I will sell the bottom. There's no how I can buy the top because market doesn't nobody has absolute control. Nobody has absolute autonomy over it. It does whatever it wants to do at any point in time. So normalize taking profit. You can't buy the bottom, you can't sell the top. Okay, so that's what I mean by saying don't pick tops and bottom. You can't do that. There's nothing wrong with taking profit, and nobody sells the absolute top, nobody buys the absolute bottom. Okay. And then the next point here is manage your trade with no regrets. You can only manage your trade when you have already planned it from the beginning. You know, the first point we talked about was planning your trade. Okay, you can only manage something that you've planned. If something is not planned, there's no how you can manage it. It's only when a trade is well planned that maybe it's now going in the way you never anticipated. That's the only time you can manage it. That's the only time you can put in your management techniques to maybe steer the trade from being a losing trade to ending up being a winning one. Okay, so manage your trade with no regrets, and there is really nothing wrong with losing. Okay, normalize it. There is nothing wrong. What you're trading is a game of probability, and because it's probability, that means it's either you win or you lose. But the major thing is that you should try as much as possible to ensure that your wins are far more higher than your losses. There's nothing wrong with taking some loss. Sometimes it happens. You need to take some loss because nothing is cast in stone. Okay, it's either this or that scenario. It's either you win or either you lose kind of scenario. Nothing is cast in stone. So normalize taking profit. Normalize managing your trade with no regrets. Okay, and then have like I said initially, make sure that your trade is well planned. Before you enter the trade, plan it very well. This is where I'm taking profit. This is my stop loss. This is what I'm going to do at this point in time. This is the profit I want to take whenever I get to this first target. This is the amount of profit I want to take when it gets to this second target. By the time you do that, if the trade is now going against you, you definitely know what you are going to do. And then, like I said, there is nothing wrong with taking some losses in the market. And as a matter of fact, some trade could end in losses. It doesn't mean that you lost. No. Stick to your plan, because that is the only time you can build confidence. As long as you've planned your trade and then you traded your plan and then it still ended up you losing. Okay, it still ended up in loss. There's nothing wrong with that. That's the only time you can develop confidence that you had a plan, you traded according to the plan, but then you still ended up losing the trade. There's no issue with that. You only develop confidence by so doing. Okay, and then don't chase hype, anticipate it. Of course, one of the things that exemplifies this statement is on BTC. Okay, in our group, in our Telegram channel, we looked at BTC, and then we made some projections. That was when we looked at the weekly candle, BTC perpetuals. We looked at the weekly candle and we saw something. We saw BTC printing a pin bar, and we all know that pin bar, most of the pin bar, okay, there is actually a particular type of pin bar that is a bearish sign. So when we saw that pin bar being printed, we knew that the market was gonna go bearish. We knew that BTC was gonna drop. Okay, so we were already anticipating it. So there is like anybody that is in our community, okay, that saw what we said and still went ahead, and maybe the person is currently at loss, that means the person doesn't know what he or she is doing. So that's why it's always good for you to, anticipate hype. market is dumping. We already anticipated it. We already knew. We already planned ahead of time, knowing that at any point in time, market will definitely start dumping. It doesn't mean that you cannot take some long positions. Of course, market never moves in a straight line. It goes up, it comes down. But the major thing is that at any point in time, whatever direction whatever bias you are having about the market, make sure it's in line with the trend. Make sure it's in line with the trend. Okay, we saw this pin bar. This is the pin bar. I mean, look at the pin bar here. That was this last weekly candle that just closed. We saw this pin bar that BTC printed, and then we knew that BTC would definitely start going down. So we are already prepared for this. That's what I mean by anticipate hype. Okay, don't chase it. We already knew that something was going to happen. We already knew that BTC was going to go down. So we are well prepared for it. We are well ready for it, for whatever happens. And then on that same BTC, we said that the next area of focus and this next area we are looking at is that this blue shaded region, knowing that whatever happens, that whenever BTC comes, there's something will definitely happen. Either it goes down or it goes up. So we already so whatever happens there, we are well prepared for it because we had already planned and envisaged that something definitely is going to happen to BTC whenever it gets here. It's either it starts going up or either it starts going down. And eventually BTC starts going down from here. We all know that this is definitely a full-blown bear market. Okay, this is a full-blown bear market. But then if it gets here and start reversing, maybe it's probably start going up. Cool, because we have seen what happened previously, that when it got here, what happened? BTC started going up, and then it came back here again, went up a bit, and it's coming down again. Okay, so we already prepared for some eventualities there. Okay, so when people are still askance, when people are still confused on what to do, we already planned ourselves on what to do at this very point in time. So that's why it's always good for you to anticipate hype. Anticipate hype, don't chase it. So when probably BTC comes here and then starts going up, many persons might start chasing it, but then this is something they could have done ahead of time. Or maybe BTC comes here and starts going down, and people that were long, they start becoming skeptical about the whole thing. But this is something they should have done ahead of time. Okay, so that's why we said anticipate hype, you don't chase it. Okay, anticipate hype, don't chase it. And then finally here I said, in trading and investing, the stuff that sounds the easiest is often the most difficult thing to execute because of one thing: emotion. Yeah, everybody knows that the popular thing that people say in cryptocurrency is buy the bottom, sell the top, or sell the top and buy the bottom. That it's very simple. Virtually everybody says it. But then the question now is, how many persons abide by that? How many persons stick to that rule of buying the bottom and selling the top, or selling the top and buying the bottom? How many persons do that? Of course, everybody says it, but majority, 90% of traders end up losing. Why? Just because of one thing: emotion and greed. And then emotion and greed, as I always say, they are not bad in themselves. If you know how to control them, if you know how to control your greed, if you know how to control your fear, there is no point in time that you'll be out of money, because nothing fuels the market, nothing pushes the market more than fear and greed. But if you know how you can, at every point in time, be on the right side of these two emotions, you will never be out of money. Emotions cause people to go against the natural thing they ought to know and do. All right, guys, so this is just a little lesson I want to share with you guys. If you like my content, you like what I'm doing, kindly hit the subscribe button, share the video till I come your way again. I remain your man, Mr. X to the O to the L to the U to the Sean, Mr. Solution.